time is valuable, and we thank you for spending it with us. I am Shelly Austin, Customer Engagement Manager at Integrity Data. Joining me also on the call today will be Gary Schmidt, Customer Care Representative at Integrity Data. We will be answering questions at the end of this webinar, so please feel free to submit your questions at any time throughout the session. We do have everyone on mute, but if you need any clarification, please let us know through the questions field in your GoToWebinar panel. All right, well, let's go ahead and get started. The Affordable Care Act has proven to be a confusing piece of legislation, especially for employers, because employer responsibilities under the ACA employer mandate are often not clear. Our 5-part 201 webinar series aims to help employers understand this employer mandate and be clear on what it means for them. Our goal in this final webinar is to give you an overview of the record keeping needed for the required IRS reporting around ACA. Who is Integrity Data? Integrity Data provides solutions to improve business processes for payroll and human capital management, including simplifying Affordable Care Act tracking and reporting, enhancing Microsoft Dynamics GP payroll, and supporting employee financial wellness. Celebrating over 20 years in the business, your people are our priority. All right, so cooperating with Affordable Care Act employer compliance requires preparation. We've organized this preparation into 3 pillars. The first one is eligibility determination, deciding on a pay or play strategy. Both we have discussed in previous webinars. And then third is record keeping for required IRS reporting. Remember, all steps toward compliance are connected. Choices you make for one affect another. This cycle never ends. It is a continuous process year after year. So before we dive into the record keeping, let's quickly recap the employer mandate. There are 2 levels of ACA compliance for employers. The first level is the coverage mandate, offering the right coverage to the right employees at the right time. This is also referred to as pay or play rules. We'll explain that ACA concept in just a few minutes. The second level is IRS reporting requirements, documenting for these employees and the IRS that you did or did not offer what you were supposed to offer, that you did so when you were supposed to do so or not. You may hear this requirement referred to in terms of the IRS form that the Affordable Care Act created, which is called Form 1095-C. So a 1095-C packs a year's worth of payroll and benefits data. Unlike a W-2, which reports on summary data, a 1095-C delivers month-by-month detail. And whereas a W-2 form goes to all employees, a 1095-C form is required for only some employees. Those employees include fully insured employers must produce this form for every ACA-defined full-time employee, and self-insured employers must produce this form for every covered employee. So even though you may hear IRS Form 1095-C referred to as the ACA version of a W-2, the only similarity in these 2 forms is their production time, which is the month of January. So accurate year-round record keeping makes that yearly IRS reporting requirement much easier. What record keeping do you need to do? First, the law requires continuous and accurate recording of every employee's hours of service. Every means exempt employees in addition to non-exempt employees. The only exceptions the ACA allows for are students on a work-study program and members of a religious order that have taken a vow of poverty. To be compliant with the requirement that no service hour be left behind, you have to find ways of recording hours that are not captured on a time clock. Also, as you are recording each employee's hours of service, you have 2 ways of tracking those hours in order to confirm an employee as full-time. There's the monthly measurement method and the look-back measurement method. Also, please consider checking out our blogs and we also have some recorded webinars for more information on those two methods of tracking hours. So as we've said, monthly tracking is key to ACA compliance. Remember, when you report to the IRS through the Form 1095-C, you are reporting on activity from the previous year. It is too late at that time to manage penalties. Because penalties for noncompliance with the coverage mandate are significant and will be assessed monthly, it's a best practice to monitor your payroll and benefits data monthly in order to make coverage decisions proactively. The takeaway here is that all changes in eligibility and affordability are calls to action, and that every action and data leading to the decision for it must be documented. Your monthly report should become your system of record for ACA decision making. So at year end, you'll have to prove to the IRS what you have or have not been offering all year long with respect to health benefits. You must provide a 1095-C form to every full-time eligible employee, or if self-insured, for every individual covered under the plan. The other thing that you must do is you must send copies of all your 1095-Cs rolled up in their transmittal, which is called the Form 1094-C. This needs to be electronically sent to the IRS. So this is a requirement for all applicable large employers, including employers choosing a pay strategy, therefore accepting a penalty for not offering coverage to eligible employees. It's also a requirement for employers offering compliant coverage to all employees at no cost to any employee. Let's translate this to 2018 reporting. So the tax year 2018 deadlines are as follows. January 31st, 2019, that's the date that you must provide Form 1095-C to all ACA-defined full-time employees. Then the next deadline is February 28th, 2019. This is the deadline for the mail transmittal Form 1094-C to the IRS. Then the last deadline is April 1st, 2019, because March 31st, 2019 is a Sunday this year. So this is the deadline to e-file Form 1094-C with the IRS. So if you're wondering whether the IRS will really hold you to all of this reporting, you really need to stop wondering because they are ready to hold you accountable. To facilitate the data collection in order to monitor both the individual and employer compliance, the IRS has created the AIR system, Affordable Care Act Information Returns. It is a massive XML clearinghouse for feeds from insurance providers, the exchanges, individuals, and employers. This system integrates the exchanges, Social Security Administration, the insurance carrier, employers, and the individual tax returns into one system where information can be cross-referenced. For employers, the 1095-Cs are cross-referenced with the monthly ACA feeds from the exchanges to see if any eligible employees got coverage through an exchange and received a tax credit. It takes the act of just one eligible employee that got coverage through an exchange and got a tax credit to turn on the potential penalty phase for employers. So of course, this webinar covers only part of the ACA complexity. There is so much more to learn. Make sure to visit our website, acafluent.com, for more educational resources. A few other tips are to perhaps watch our 101 educational videos that cover whether you have to comply, how to comply, and penalty details. Also, each video from the 201 educational series, which completes today, will be available for on-demand viewing. We have an ebook that you can download, which is called Employer Essentials for IRS Reporting. And we also have a printable infographic ACA checklist for 2018 reporting. Our website includes quick links to IRS resources if you'd like to hear it straight from the source. We also encourage you to access our blog feed as it continually updates with new hot topics. The last tip is to learn the easy way to be IRS compliant with the Affordable Care Act and join us for a live demo. You can always reach out to our customer support team if you would like to do so. So before we transition into the Q&A segment for this webinar, let's dive into a quick recap of the ACA 201 Summer Series and the topics discussed over the past several weeks. So the first one was concepts behind the Affordable Care Act's employer mandate. We covered we understand the concepts that build the Affordable Care Act's employer mandate. We explained new concepts such as shared responsibility and the pay-or-play rules, and redefined ones like applicable large employer, hours, and affordability. Our second webinar was guidelines for classifying an employee as full-time. We gave you some guidelines for classifying an employee as full-time, what to do when an employee is first hired, what are hours of service, how do you credit special unpaid leave, time for employees on call, circumstances when you do not track hours, and the time for shared employees in commonly controlled or affiliated groups. The third webinar was determining eligibility for health coverage. We gave you helpful guidelines for determining when an employee is eligible for health coverage. We dove into the two methods for measuring whether an employee is full-time, the monthly measurement method and the look-back measurement method. We also explained how each method works and when it is best to use each one. We also went over special rules regarding employment status changes and how they affect eligibility. Last week's webinar was choosing a pay-or-play strategy. We gave you guidelines to use when choosing a pay-or-play strategy. We explained what the different strategies mean, what choices you have, and what to consider as you make these changes. These choices include what the coverage penalties are, whether you may be vulnerable, and what offering quality and affordable insurance means, including the 3 safe harbors. And then lastly today, we covered record keeping for required IRS reporting. We provided an overview of the record keeping necessary for the required IRS reporting around the ACA employer mandate. We also covered what you need to do annually in filing season, Form 1095-C, and more critically, what you should be doing continuously on a monthly basis all year round. We truly hope that this summer's educational series has been helpful. Again, you can always visit our www.integrity-data.com/ACA-201 for previous recordings and slide decks, and today's webinar will be available within the next 24 hours. For more information about our solution offerings, again, visit integrity-data.com/ACA. We're ready to go ahead and address any questions that you may have. If you do have a question, please enter it in the side panel. And Gary, are you on the line?
I am. Hi, Shelley. Hi, everybody. I have one question here, and I do have information on this, Linda, that I'll send to you. Here's what it says. Maybe Shelley has an answer to. How do opt-out incentives affect ACA affordability determination? Opt-out incentives. Shelley, do you know about this?
Yeah. Generally speaking, if you are a company who adopted an opt-out incentive or opt-out credit after, I believe, December 16th, 2015, that amount does get calculated into the affordability determination. The opt-out amount is what I'm referring to, gets included in the calculation for the affordability determination. But it would be good, Gary, if you can send her some information so that she can review that in detail and see how it specifically applies to the plan that you may have in place.
I will do. No problem. That's the only question at this point.
Okay. I'll give just about, another 30 seconds or 60 seconds or so. If there's any other questions, we'd be happy to answer them here today. If you don't have any questions right now, of course, if you're thinking later on or reviewing the webinars, the presentations later, and you do come up with questions, you can of course reach out to us via email at the customer support email address, and we can email you some content or information to review at a later time. Oh, I think, is there another one there, Gary? I can't quite read it because...
Yes, just came in. Can you briefly talk about letter 226J? That's the one
Yes,
we don't like.
yes. Go ahead. Yeah, Gary, if you want to start, yeah, please go
No, I'm
ahead.
going to
None of
let
us
you
read.
talk about it.
So the 226J is a letter that you may receive from the IRS. It's basically a penalty assessment letter. So we talked about the AIR system and all of the information that's getting exchanged in that system. And if the IRS sees that perhaps an employee went out on the exchange and was able to obtain a subsidy, it may appear as though your company was not in compliance. And so they will send you a 226J letter, which is it's only an assessment. It's not a final determination, saying, right now I believe they're only working on the 2015 tax year. So it would have a proposed penalty. You do have, I believe, a 30-day window to respond to that. We always recommend that our customers download that retention package at the end of the year, because you can use that to help respond to the 226J letter if you find that it is inaccurate. You did perhaps offer an employee coverage. And so if you have that retention package, you can use that along with your response. We highly recommend that you respond within that 30-day window. Don't wait. If you can, respond as soon as possible, please do. Once you do respond, the IRS will evaluate that response, and they will respond again with a 227 series letter. And that letter is kind of the final determination, and it'll tell you whether they accept your evidence that you did provide health coverage, or it will provide a final penalty amount. But there would be another response after you submit your response. And we're also available at any time if you want to review one of your filing years, or if you have questions about your 1094 that was submitted, we're here to help you with that as well.
And I might add, Shelley, that if they go to the top right-hand corner of their cloud solution in the blue circle where there's a question mark, and you click on that and then go down to the second one, it says knowledge base articles. We do have a knowledge base article written about the 226J, which might be helpful for them as well.
Yes, that would definitely, we do. We've got several articles on the 226J, and I believe there should be one coming out shortly that talks about the 227 series letters as
And
well.
is that on the blogs, maybe?
The blogs, yes, the blogs, and there's also some content in the KB articles.
Okay, great. Another article, question.
Yes.
Do you know how many years the ACA reporting record data should be kept? I believe it's 3
Oh,
years is what I've heard, but
right.
I
I
could be
believe it was.
wrong.
I think you're right, Gary. I believe that it is. The recommendation is at least 3 years.
David says 3 years. Wilmert.
Awesome. Yes, that is correct. So 3 years is what the guideline is for that.
Yeah. Okay.
Any other ones?
I might add to that or say something else, Laura, to that, long as
Yeah.
you get. Um, so they're looking at year 2015. So that's
Mm-hmm.
what, the third year. I would be careful in getting rid of your data. Particularly, one of the things you should do is, and I think you've done this already, is to save the IRS retention package, and that will safeguard you from losing all your data, rather than just eliminating all your data. It's good to save it someplace, I believe.
Yes, for sure.
Okay, I think that's it. We got to thank you.
Oh, awesome. Well, good. Well, no, thank you guys. And again, if any other questions come up or available at any time, please just send us a quick email. And also feel free to sign up for our ongoing user groups. Just because the summer series is over, we do have webinars throughout the year that you can sign up for through the Integrity Data website that also talk about some of the topics we talked about this summer, but also new topics as they come up. But other than that, we thank you again for joining us, and we look forward to speaking with you next time. Have a great rest of the day.
Yes.
Bye-bye.
Bye.